So wanted to talk to you, Nate, first out of the gate. New FHA rules are going to spark some more condo sales, it sounds like. You know, long been a thorn in the side of realtors in the Tampa Bay area. The majority of condos across Tampa Bay cannot qualify for an FHA mortgage, which is a lower down payment mortgage. It sounds like maybe more communities will start to qualify for FHA. They're starting to loosen some of the guidelines. One of the guidelines that they've loosened recently, historically FHA has only allowed 25% of a mixed-use condo community to be used for commercial purposes, and they've now bumped that up to 35% of the space can be dedicated to commercial, with up to 50% with it for exceptions. So, you know, a lot of the mixed-use communities, some of the stuff in Channelside and downtown, and then some things in St. Pete that have a commercial aspect to them are now going to start to be more likely to be eligible for FHA loans. And Nate, specifically, you know, FHA loan with a condo, you know, 3.5% down payment. What are some of the other challenges outside of this new guideline that causes condos not to qualify for FHA? Is it delinquency?
Yeah, in general, you know, condos are their own little animal, so to speak. You know, when you go to buy a house, you know, it just comes down to the appraisal, making sure the value's there and the condition's there. When you go to buy a condo, whether this is FHA financing or conventional financing, it's not just about the value and the condition. There's a lot to do with the association itself. There's condo questionnaires that get put out that have to be completed by the association, and things that they're looking for is, you know, for example, what's the ratio of owner-occupied units to investor units? For example, if you're buying in a development and 90% of the units are owned by investors, it's much more inclined to probably be a you know, long-term, possibly downward spiral, not really an appreciating area. It's more of a rental apartment complex than a condo almost. They look at that. They look to see if the number of units that are delinquent too. If you have a high ratio of delinquent units in there, there's a good chance that the association will start to assess owners, and that's another, you know, liability for the owner to pay for, and also a concern for the lender to have another potential lien on their property.
Right, because then you're talking about putting them out of their debt-to-income ratios they may have qualified for, higher chance of delinquency, higher chance of, you know, foreclosures and all of that. So,
and they want to see too if the reserves are funded as well. You know, every association, part of their monthly budget is typically allocated to, you know, reserving money for whenever the roofs need to be replaced or the driveway's got to get repaved. And they look at that as well to see if, you know, if it's properly funded. And the lenders looking for these things are actually in the buyer's best interest, because these are things that the buyer probably wouldn't even know to ask or know to even think about.
Right.
So if it's in good standing, that's mainly what they want. They want to make sure it's in good standing financially and you know, being planned out well.
So I think, again, FHA loosening up on some of those guidelines could certainly help, but you still got to have a condo community that has a strong financial backing, good reserves. You know, a lot of things have to be in the condo's favor. I mean, if you look in Tampa Bay, for example, I would say maybe 5% of the condo complexes are FHA approved. I mean, in Tampa, I mean, it's less than 10.
Yeah.
So there's not a lot of them out there. I mean, we've got them on our website and on our lists and stuff. If you're concerned, you know, shoot us an email or go check us out online. But you know, it's a challenge that a lot of people run into. Oh, I want to buy a condo, but I only got X% down.
Yeah, if you can go FHA or VA on a condo, that's the best credential you can get if you're trying to sell out condos, is being able to get FHA or VA approvals in there. You know, you see these places too in the area where they can't even get conventional financing, and that's where you see these condos people see online. Oh man, I saw this condo for like nothing. Right. It's because you can't even get financing. Right. Like, well,
and I think, you know, it's such a great time for investors in some of those communities too, because I think that'll loosen it. It'll be better. You know, I mean, there's condos in South Tampa for $40,000 and $50,000 that 3, 4, 5, not really 3, 5 or 6 years ago were $200,000 condos. So great investment opportunity as
monster. They're really good.
But if you're buying them and have to sell them within a year or two, you're looking at a hard sell because your audience has shrunk.
Correct.
You know, you can't sell them to the general, you know, move-in type buyer because most of those need financing.